Growth in China is one of the main focal points for global markets. So when authorities from the world's third largest economy say they are happy to accept weaker growth, just how will investors react? Joining me down the line to discuss is Maritza Cabezas. Maritza, 2014 is only in its early stages, but already some analysts are picking out the main market driver so far as being the disappointment of Chinese PMI data. Friday sees a plethora of data from China, including trade balance, imports and exports, to name a few. Now, considering the sizable rebalancing efforts from China, could the PMI really set the tone for the year?
Well, the official PMI moderated to 51 in December 2013 from 51.4 in November. This reading was slightly below market expectations, but we are seeing that other reports, let's say from Korea, which is leading in trade reports, that it was quite firm, and that indicates that external demand is strong. This suggests that in the case of China, we expect exports to be also firm, mainly because we're seeing that the global economy is having quite a strong recovery. So this suggests that in general, we expect the year 2014 to be slightly better than 2013 in terms of GDP growth, and that's basically thanks to this pickup in the global recovery.
China's leaders are set to be tested in their willingness to sacrifice economic growth to tame a record debt build-up. But what do you make of the suggestion from analysts who say over the course of 2014 they will realise the slowdown, the deceleration, that it's worse than expected, and they will loosen their stance a little bit?
Well, China is effectively navigating uncharted waters as it moves through to this consumption-driven economy. With some support, economic data has been gaining strength, particularly in the second half of 2013, after growth had slipped in the first half. And but we are seeing that the leaders in China are very keen in introducing these reforms that in the long run will probably provide China with more sustainable growth. So the slowdown of deceleration on account of the policies that are being taken, I don't see it. I know that China is experimenting in its move towards a more private-oriented economy, and in this process, of course, there are some hiccups, and you do see that there are moments of liquidity crunches, but they are rapidly corrected, and authorities have said that they would provide the liquidity that is necessary, and more broadly, the support that is necessary to maintain the economic growth targets. So we effectively here in ABN AMRO don't have a scenario with a deceleration and rather a slight pickup. Our growth forecast for 2014 is 8%.
The People's Bank of China set the dollar-yuan central parity rate at 6.1059, higher than Friday's 6.1039, following dollar strength from overseas. Now, some analysts believe, according to previous experience, central parity and the spot yuan may consolidate at current levels for around a month. But what is your outlook?
Well, our FX monthly will be released next week, and our forecast for March for the yuan is 6.03, and this, according to our FX specialist, reflects a continuous but modest depreciation from the yuan, and this is in line with an economy that continues to stabilize and where reforms are moving in the right direction. So that is our base scenario.
Maritza, thank you so much for your time and perspectives today. Well, viewers, that's all we have time for at the moment, but click back to Dukascopy TV for Natalie McDonald's Targets in Focus with IG Markets. Goodbye for now.